Hello, friends, and welcome to the CUInsight Network podcast. My name is Lauren Culp. I'm the president and CEO at CUInsight.com, and it's my job on this show to have conversations with the thought leaders who support the credit union community. We get together to identify the issues that affect credit unions and talk about all the best practices out there. We get to learn from one another and improve our industry together. My guest on today's show is Jim Holt. He's the Chief Development Officer at Student Choice. Jim, thank you so much for being here.
Hey, thank you, Lauren. This is going to be fun. I appreciate being on your podcast.
This is going to be super fun, not least because of which you all do some really cool work. So I want to ask about that. But before I get into that, I always start these episodes off the same way, which is to say most of us did not think or know growing up that we would get to work with credit unions one day. What did you want to be growing up?
Oh, boy. Yeah, I didn't really have much of a plan, Lauren. I would say that when I was ready to graduate from college, I wanted to have a fun car. I wanted to continue to have some good times with my college buddies. But I was also with a pretty terrific girl that would later become my wife. And I knew that she was moving back home to Chicago after graduation. So given that she's pretty awesome, I decided to move back to Chicago, Lauren, or to Chicago, because I came out of Minnesota. But I then got a job as a mortgage loan originator. And while I never really fancied myself as an originator, it actually turned out to be a really good first job. So it was 100% commission-based. So That's always a little scary, right? Sink or swim. I did my best to swim, but steep learning curve. And I learned a heck of a lot. You know, when your rent depends on it, you tend to kind of get self-disciplined, which is important because I didn't have to report anywhere. But you have to hustle. You have to hustle to get a paycheck. And I do remember, gosh, this is kind of a funny story, but I remember I learned an important lesson during that time. And I was trying to break into a real estate office. And that's the key, right? Is if you can get into a real estate office and you get those agents to direct their customers over to you, and then you write the mortgage. So I was trying to break in and I got my first break. And I remember this manager of the agency gave me a spot to present to the team. So usually real estate offices will have, once a week, they'll come together with all the agents and they'll have a team. So I got my big shot here. And I remember I was pretty nervous about it. And I wanted to make a lasting impression. I certainly wanted them to remember who I was. So I came up with this idea. And I can juggle. So that's a little side note. Cool. Yeah, I could juggle. And at the time, I was pretty good. So, I can juggle 4 balls. And I was like, okay, I'm going to incorporate juggling into this presentation. That's what I'm going to do. So I started off my presentation juggling 3 balls, right? And I said something like, everyone knows how to do conventional mortgages. It's easy as juggling 3 balls, right? But when you need help with a difficult FHA loan, and then what I did, Lauren, is I dropped the 4th ball right into, I don't know why I'm whispering, but I dropped the 4th ball right into the pattern. And I said, I'll make that FHA loan look as easy as a 20% down, 28% DTI arm. And boom, mic drop, nailed it, right? I was feeling so good. I was like pumped. So I was handing out my business cards and going, oh my gosh, I'm going to hit pay dirt. And not one single agent ever called me, not one. And that was the lesson, because what I needed to overcome was to prove to these agents that they could trust me, that I'm someone serious. Yes, I'm 22 years old at the time, but they could trust me. I'm serious. I'm devoted to the craft of mortgages, and that they could feel good about sending their clients my way, knowing that I'm going to take good care of them. I'm going to deliver quality product and so forth. And what I ended up delivering was, hey, I'm a really fun young kid that knows how to juggle. That was so important because I learned that you have to understand your audience. I did later become successful in that. I continued to be a mortgage loan originator for a few years, but boy, that was the first position that really helped kind of cut my teeth in sales, business development, relationship building. Great experience.
It's really cool to hear about where you started, especially knowing the work you do today. So tell us a little bit about the journey to your current role now as Chief Development Officer at Student Choice.
Yeah, well, after, a few more years of juggling in front of agents, I moved into retail operations there. I actually managed a branch on the south side of Chicago. And at the time, I remember being intrigued with secondary markets. And I remember chatting with the guy that was in charge of it. And he was really cool. I mean, he owned a Harley. It was great. I always enjoyed talking to him. And I was like, you know what? That's what I want to do. I want to get into secondary market. And so there wasn't any room where I was at. So I went ahead and I applied and I got a job at Sallie Mae, which at the time I joined, Lauren, it was still a GSE. It was still a government-sponsored enterprise. And it's here where I began to start calling upon credit unions throughout the Midwest. So I would call on them. I would help them purchase their federal student loans at the time. We'd set up for purchase commitments and so forth. And I remember just talking to credit union folks and just really starting to understand the value that credit unions bring to their members, communities, their segs. And that was really cool. I did a few other things. I went and helped Citibank when they started their own private student loan program, helped build that program and some teams there. And things were great until 2008. And that's when the recession hit, the Great Recession hit. Things got a little tricky then. But it worked out pretty good because I stepped over into an adjacent market. And when I did that, I got to know two people, really, really cool people, Scott Patterson and John Jeffries over at Callahan and Associates. John is still there. He's a managing partner. Scott is now the CEO of Student Choice, where I'm at now. Great, great people. I was really impressed. And I remember them reaching out. And they said, hey, Jim, we just started this CUInsight, last year. We would love to have you come over, help us kind of build out the business development side. And I kind of remembered back to, early days when I was with Sallie Mae and working with credit unions. I was like, my gosh, that was a lot of fun. And I had tremendous respect for Scott and John. So I said, yeah, let's do it. So that's what brought me in. And during those initial years, this was back in 2009, we grew rapidly, right? And today we stand as the leader in the private student lending space within that credit union vertical. So great decision, great fun. So happy I did it. And it's great being here.
I always love those get the gang back together kind of moments. It's really cool to be able to go work for a leader where you're like, I know this is going to be a great fit. I'd love to know a little bit more about Student Choice. There is some really cool work you do. You mentioned private student lending for credit unions. What does Student Choice do and where do you really add value for credit unions?
Yeah. So Student Choice, we're CUInsight. Right? We're owned by 11 leading credit unions around the country, along with Valera, formerly PSU Co-op, Callahan and Associates, and Culp. And what we do, Lawrence, we provide solutions tailored around really helping students best afford their education. And we do it through thoughtful education as well as financing. When needed. What we do, I think, is really important in today's world because college is super expensive, right? A private four-year college now has a price tag sitting around $56,000 a year. Now, that's before institutional and grant funds are applied based on the student's academics, their test scores, the family incomes, and so forth. So, most are not paying the $56,000. I hope not. But on average, you're likely paying $34,000 to $35,000 to attend a private four-year school. And most, families nowadays, they haven't tucked away $140,000 for those 4 years and now sometimes 5 years. So this is where private student loans come in, right? I mean, these are strong performing loans with high net yields sitting around 3%. So CFOs love these. And they also have a longer duration. I mean, they're sitting around 10 to 12 years. So CFOs love that too. So I think the value we bring is not just putting these quality loan assets on the credit union books, but it's helping their existing memberships. It's helping credit unions' existing memberships with a very difficult financial challenge that members face in paying for college. So, I mean, if you're a CEO of a credit union, why would you want one of your members to end up going to SoFi or to Sallie Mae, both of which are chartered banks now, right? I mean, Sallie Mae is no longer that cozy GSE. I mean, SoFi and Sallie Mae are charter banks where they have full intentions of trying to steal and pull that member away from you, right? So why would you refer, right? It doesn't make any sense. So, I mean, I guess I see the value is really the loan asset itself, right? I mean, we have a high yield, longer duration, but also helping members find an affordable solution to pay for college. And maybe the most important item here is bringing new young Gen Zen members to credit unions. And I think that's what really excites me now, Lauren, is bringing these new Gen Z members over. And I think that excites a lot of our partners too.
It certainly is exciting, especially when you think about, the aging membership that many credit unions have and this really interesting way to get folks who are just starting their careers into the membership. So I know a lot of credit unions have not made their way into private student lending yet, but it's such an area of opportunity. You touched on it just a little bit, but can you share some of those key benefits of a student lending program for credit unions?
Yeah, absolutely. And you're right, Lauren. I mean, not as many credit unions have moved over. I mean, there's just over 700 credit unions nationally that have private student loans on their books. And we work with over 40% of them as the leader in this space. But I mean, there's over 4,600 credit unions nationally. So we need more than just 15% of credit unions helping students. We really do. And there's over 15 million undergraduate students, and a fair percentage of them need help financing. So, you know what, Lauren, I would say credit unions need those members too. I think that's really important. I think that's, somewhat profound. I mean, students, albeit they may not know it yet, but they would love the value, the community focus, and the service that credit unions bring to their members. And honestly, credit unions, and I know that they know this, they need to get younger, to your point. All right. I mean, it was just a few years ago that I remember the average member age sitting at 47, and now it's up at 53. I mean, when you looked at, Americans as a whole, I recall the median age sitting around like 37, 38. So this delta, this gap is getting larger and larger, and that's not good. So I think the biggest benefit of student choice and what we do for credit unions right now is we help introduce Gen Z as new credit union members. And this is critically important and something every credit union I know is wrestling with is how do we get younger? I know boards are talking about it. I know exec team senior leaders are talking about it. But today, a 53-year-old credit union member, what are they doing? I mean, they're shedding debt, right? I mean, they have their investment advisors saying, hey, prior to retirement, try to lose as much debt as you possibly can. And that's not particularly helpful if you're the chief lending officer there at the credit union. But what is helpful is a college-educated Gen Z new member. Someone just starting off on their journey, and they're going to need credit cards. They're going to need car loans. They're going to need savings, mortgages, investments, all of that good stuff, and lots of it. But as a financial institution, how do you go about attracting Gen Z when you know that they are probably the most tech-savvy generation ever? And they want everything mobile-based and integrated. And that's tough, right? Because we know there's a strong technology bias out there that favors these big national bank brands. And we also know that, quite honestly, there's probably not much of a difference between them and credit unions' own online banking platforms. But there is a bias, and there's millions of dollars being spent every day on marketing by these big brands. So how do you compete? So there is some good news. I mean, according to McKinsey, the second most important thing that these Gen Z or Zoomers are looking for is service quality and a community focus. And that's where credit unions win all day long. But, and it is a big but, I mean, how do these Gen Zers, find out? How do they find out? That's the rub. But that's where a private student loan comes in, right? And helping them with a private student loan, they're going to see that community focus that credit unions provide. And we know that's important to them. And they're going to see that the online banking ecosystem is pretty darn slick. So for me, the ticket to Gen Z, or at least one of the tickets, right, is a private student loan. And I know there's other things. But why on earth wouldn't you want to leverage this tool, this private student loan, to attract Zoomers when you know you need to get younger? And many of them need financial help, given the cost of college these days. So one last thing, and giving credit to you, Lauren, and CUInsight, is I read a study that you guys put out. And according to that study, 90% of existing members won't advocate or encourage their kids to join. So you can't rely on your existing members to kind of perpetuate things. But again, that's where a private student loan delivers a Gen Z member so that they can experience what credit unions do in the community focus. And I think that's a massive benefit, Lauren. At the end of the day, that's a huge key. And you're putting a good quality loan on the book, as well.
Following a private student loan like this, and to your point, so many cool opportunities. How do you see the membership going throughout its life cycle? Do you see it really limited to that one product across some of the credit unions that you work with, or how are they taking the opportunity to really deepen that relationship?
Yeah, that's cool. And we just recently, and I'm going to say maybe a month and a half ago, I know our chief credit officer, Brad, he worked with TransUnion and on what type of cross-sale opportunities there are for those members that take out a private student loan, right? So what we found out is somewhat intuitive, but actually pretty helpful. But what they found out is when you take out a private student loan first, right? So that's the first thing that you take out. Within 13 years of taking out that private student loan, 81% of those members took out, on average, 2.5 auto loans. And just about half of private student loan borrowers had, on average, 2 mortgage loans. Now, that's not necessarily with the credit union, right? So that's a big caveat, right? So TransUnion couldn't say, hey, that was with the credit union or with another financial institution, but it shows that there is cross-sale opportunity. Now, what I found to be, even more interesting is for those 81% that took out 2.5 auto loans, those members have a median credit score of 756, a DTI of just around 15%, which is, plenty of room to take on more debt, plenty of room, and a median income of just over 100,000. So I think that's really important because we've heard so much in mainstream media about how student debt has put such a terrific load on the backs of young adults and how that's suffocating. And you know what? I get it. There's a lot of sad stories, tragic stories even out there, no question. And quite honestly, there's a lot of debt. But the vast majority have successfully leveraged their education. They've, secured jobs and they're doing well and they're paying back their loans. And these stats we learned of, with TransUnion are evidence of that. I mean, everyone's FICO has gone up dramatically, sitting north of 750. And there is no way that if you're failing to pay back your debts, your FICO is going to be north of 750, plain and simple. So there's also good stats out there from the Bureau of Labor, that shows the earning power of a college degree. It comes in about twice that of those high school diploma recipients, and certainly great resiliency of a college degree when it comes to labor disruptions or unemployment. So we know it's one of the best investments you can make. But the key here is you have to get the degree, right? I mean, that's the most important thing, right? And usually the bad stories happen when you take on debt and you don't get the degree, and then you don't have that degree to leverage to gain that, better paying job, right? So it's like when you get a loan for a car, you have the car, you drive the car home, which is good. When you get a loan for a school, don't forget to get the degree, right? I mean, you want the degree if you get the loan. That's the most important thing. And college is super expensive. I get it. I mean, I have 3 boys. I know it. And I would love to see prices come down. I really would. I mean, at the end of the day, banks, credit unions, fintechs, I mean, we're just trying to help. I mean, we're not setting the prices. I mean, the colleges are setting the prices. We're just trying to create the affordable means by which they can help finance a gap that remains. And if we can get more credit unions involved in helping with the financing, then I feel pretty good that we can help these students, we can help these Gen Zers, finance it responsibly at a fair interest rate where they can afford to pay it back.
It's so cool to hear about all of the opportunities there for credit unions. And, to your point, I don't think college prices are coming down maybe anytime soon here. But we know that there are some other types of careers too that maybe are not a typical 4-year college education, but some other types of careers that have less access to traditional funding. I know you guys developed a really cool career ed initiative that helps credit unions fill that gap. Can you tell us a little bit more about that?
Yeah. So that's really cool too. I'm super excited about this new solution. And the background is we came about this by, listening to our partner credit unions and just kind of hearing about their member need. And we had one of our partners, USECU, formerly Utilities Employees on PA. And they've been a partner of ours for around 8 years now. And shortly after the pandemic, we sat down and we learned that many of their members were attending utility trade schools to gain certifications and training. And, these things cost money. And to utilities' credit, they were helping their members, via personal loans and working with them. And that was great. And when we're sitting and chatting, we said, hey, there's an ability here to scale and broaden the reach. And so we structured together a private student loan, and we began setting up these programs at various utility trade schools around the area. And there's been terrific growth, right? And so this is kind of what launched us. We started thinking about other areas where there's a significant labor shortage. And it didn't take us long to kind of find out about the pilots, airline pilots. I mean, there's a big shortage, a big need for pilots given, the mandated retirement age. And so a lot of the airlines were scrambling, and they still are trying to get pilots. So we set up these airline pilot cadet programs, and we, launched a program that is helping cadets get trained and move into American Airlines. We have a program specific for American Airlines, Southwest Airlines, Alaska Air, Horizon Air, Republic Airways. And that's worked out really well. Now, in all these cases, we collaborate with our partner credit unions to actually make these loans. And they've enjoyed it too. So, I mean, some of those partners, it makes perfect sense. I mean, American Airlines Federal Credit Union, makes sense, right? Alaska Air Group, makes sense. But we've had others too. Center Park has been a great partner in this space. Elements, in Indy, great partner. In fact, we just started and we sent out press releases probably just a couple of weeks ago. 2 new programs with Center Parc, right, to set up SkyWest Airlines and JetBlue to help train cadets for those airlines. So that's been great. Now, where we're at right now is we've kind of moved on. We're still excited about the pilots, great need there, but we started looking into nursing, right? So this is really cool because we know there's so many towns and cities out there that are short-staffed. They need nurses, So why not try to help? And what a great way to help by involving the local credit union in that same town or city. So that's what we're trying to do now. We're kind of, in the beginnings of it. And we're not targeting traditional RNs, right? So those programs, Lauren, kind of run through the colleges and universities out there today, and they're fine, right? They have financing options. I mean, we've been probably working with many nurses over the past 15 years on that side. But where we're putting our focus is on the vocational and associate nurses. And what we have learned is that many nurses serving our communities are not all RNs. A good chunk of them are vocational nurses or associate nurses. And no matter what, if you're a practicing nurse, you have to pass the national exam called the NCLEX. So this is true for vocational, associate, even the 4-year degree RNs, and it's the exact same test, right? So if you don't pass, you don't practice. And in the case of those vocational or associate nurses, many of those students find it very difficult to find financing to help pay for that certificate or degree. So that's where we started having conversations with our credit union partners and pairing them up with high quality programs within their community. And it's really cool because credit unions love supporting and helping nurses that will be practicing in their very own backyards. I mean, these are individuals that are going to be walking into the branches. They're going to be shopping at the same stores. They're going to be eating at the same restaurants. So we're excited about nursing. We just embarked on this venture. Obviously, if any of your listeners to this podcast have an interest in that, and it doesn't have to be nursing. It doesn't have to be pilots or utility workers. I mean, if anyone is aware of a need within the community that they serve that requires some form of education, or certification. So it has to relate to some certification or education or something, then I would love to talk.
Amazing. I'm also curious, and your answer there leads into this question for me. Of course, private student lending is maybe a little bit more of a niche market for a lot of credit unions with some really unique complexities. Would you say it's really best practice for credit unions to partner with a CUSO like Student Choice when they're thinking about student lending? And how do you all tangibly help the credit unions that you work with?
Yeah, totally agree. I mean, our 11 credit unions owners, they're big shops. I mean, some of them are 10 billion plus in assets. And all of them certainly had the ability to start up their own programs. But to Callahan and Culp Slip's credit, they brought awareness to the idea of, hey, isn't this a good opportunity to start a CUSO, right? And 11 credit unions said, yeah, you're right. And they, started it up. So it makes total sense. I mean, because you're right. And I don't take offense to it. I mean, student lending is a niche play, right? I mean, it's only going to be a very tiny part of the credit union's overall lending portfolio. I mean, probably 2-3%, right? So it's definitely a niche play, but it's a complex product with a lot of moving parts. I mean, you have to work with each individual financial aid office at all of the colleges and universities across the country. You have to be sure you gain their certification for each loan made. You have to monitor academic progress of these students. You have to know when they graduate or separate. I mean, there's a lot of factors, but when you do it correctly, it makes these loans very, very attractive and high performing. So you need to put the work in. You certainly need to do a lot of things, and it doesn't really make sense if it's just 2 to 3% of your overall lending portfolio. But what does make sense is a CUISO. So, yeah, we manage all of the operating facets of the program, Lauren. So soup to nuts. But these loans, are made and placed on the credit union's balance sheets. I mean, these are their loans. These are their members. But we are kind of like their outside student loan partner, up on the second floor and the back of their headquarters, working on student loans. I mean, that's kind of what we are. But it makes perfect sense to partner with the CUISO, leverage their scale and expertise.
That is so cool. Thinking of all the things you offer credit unions, and to your point, it might not be a huge chunk of their portfolio, but I think the chunk that it is really impactful. As we look to the future, where's the focus for student choice for the road ahead? What's on your roadmap?
Yeah, this is kind of fun. So I guess I would say we're looking forward to going deeper with our partners today. So kind of a fun segue. And outside of student lending, I mean, we just built a brand new state-of-the-art, and I'm talking from scratch, Lauren, state-of-the-art loan origination platform. And there is literally nothing like it in the student loan industry today. I mean, nothing. It's API forward, mobile first. It offers very little friction. The friction that it does have, we are chipping away at that friction, leveraging APIs to do so. And today we have close to around, I would say 80 to 90 of our partners using the platform today. And moving forward, we're going to be putting more of our clients on that as we get towards the end of the year. And then what this does is I think this gives our partner credit unions more ability to interact with their private student loan members within their own online banking and branch networks via integration. So I see better cross-sale opportunities, more productive memberships down the road. But ultimately, I mean, I see Student Choice continuing to deliver what, to me, should be the most coveted member to credit unions, which is that recently minted college graduate, that Gen Zer. And the more successful we are, the quicker we can start lowering that average member age down from 53. I mean, wouldn't it be great to get back down into the 40s, right? I mean, I think that will help everyone. I mean, it'll certainly help credit unions continue to prosper. But that's where our road ahead is. We're going to continue to go the career ed and develop, solutions to help areas that need jobs. We're going to continue to work with our core solutions with colleges, universities, and helping credit unions penetrate that market. But we also have now a fantastic solution in this loan origination platform that's really going to help kind of deepen all of those relationships, those new relationships that credit unions are going to have with the Gen Z.
It is so great to hear about the work that Student Choice does. And we're going to put contact information for Jim and his team here in the show notes of the post for anyone who is interested in getting in touch and learning more. Jim, as we wrap up the show, I always like to have some fun with rapid fire questions to let our listeners get to know you a little better. I'll say the questions are rapid. Your answers don't have to be. Are you ready?
Go ahead.
All right, let's do it. Number one, who is someone in your life that was a great leader and what makes them so great?
Oh, okay. I'm going back, Lauren. I'm going back to those early days being a mortgage loan originator. There was a guy there. He was one of the senior leaders, and I don't know why, but he took me under his wing. His name was John Pellish. He's not with us anymore, but such a outstanding man. And he taught me that you have to continue to invest in yourself. And one of the things that he did for me, I mean, there's many, but one of the things is he set up time every week to have like a 30-minute session with me. I mean, how cool is that, right? I mean, because I'm no one, right? I'm just this, recent college graduate. But so every week I would meet with John, right? I mean, I remember a month, we probably spent a month where he devoted time to teach me how to use the HP 12C. And Lauren, I'm afraid to even ask. I mean, do you know what the HP 12C is?
No, I don't.
I don't, it's horrible. I don't even know why I'm sharing this. It was like the calculator at the time, Lauren. I mean, it was the best tool in your tool belt when you're in mortgage loan originations. I mean, I still have my HP 12C, right? So anyway, John Petalish, that would be the guy that jumps into my head.
Awesome. Nothing better than somebody who makes a lot of time to invest into us. All right. Well, speaking of investing, this next question, if you are going to splurge on something, say you want to treat yourself, what is one thing you might invest a little bit in, whether that's time or resources?
So I don't know if this is a great answer, but my wife and I just moved from Chicago out to Denver, and we bought a house. And the one thing that I think we both wanted was we wanted, a view of the mountains, and I really wanted like an in-house bar. So I guess we splurged and we put a bar on the top floor, and we've called it Sky Bar Denver, and it has its own website. I mean, we're still working on search engine optimization, but I think it's doing pretty well. We're having a lot of fun with it. The price of the cocktails, Lauren, keeps our patrons coming back. You may get overserved, but it's always really good, fun time. So yeah, I would say that would be something that I kind of splurged on.
That is very cool. I love it. Next question for you. A little bit of a random question. If you travel for work, many of us do, what is the city that you're really excited to visit? When you see it on the agenda, what's that city for a client visit, for a conference you're super excited about?
Yeah. Okay. So it used to be Denver, right? I mean, but now we're here, and that's great. Yeah, I really love visiting New Orleans. My middle son just had his bachelor party out last year in New Orleans during Mardi Gras. He didn't invite me, Lauren. I mean, I couldn't believe it. I mean, it's like, I know New Orleans. I mean, I think I could have brought a lot of fun to that bachelor party, but he didn't invite me. So that kind of sours things a little bit. But you know what? I'm going to go with San Francisco. I love San Fran. Unbelievable places. City is super cool. Great Irish coffee at the Buena Vista. You got the redwoods. You got wine country. And yeah, I've got two other boys. So maybe if they invite me, to New Orleans, maybe New Orleans will pop back up. But I'm going with San Francisco.
I like it. All right, next question. What is a book you think everyone should read?
Yeah, I'm not a huge reader. I can read, but I don't read that much. I mean, I'm better at movies. I mean, I can give you my favorite movie. Oh, no, I just set myself up. No, okay. I mean, you got to go with Godfather 2. And I know probably a lot of people are going to be upset with me for not saying Godfather 1, but I'm going to go Godfather 2. I also have to go with Hoosiers. I mean, when Jimmy Chipwood says he can make the shot, I mean, I still get goosebumps, right? So, and then my rom-com, this got to be Moonstruck. I mean, Nicolas Cage, Cher, So I know that's a bad answer because I gave you 3 movies, but that's what I'm going to go with.
All right. Those are some good ones. My next question for you, what has been your best hack for creating balance and integration between your work life and your personal life, or sometimes I call it your life?
Yeah. All right. Well, back in the day, it was certainly my 3 boys, right? I mean, there's always activities going on, whether it be, baseball, football, tennis, parties, of course, a round of court dates, prom dates. Yeah, always something. Gosh, those were crazy years. But now that all the boys are they've moved out now and they are productive citizens, they're paying taxes. I think being with the right person. And in my case, it's the person that I followed out to Chicago, my wife of 35 years now, Jan. I think that's what gives me balance. And, we enjoy each other so much, and it's easy to always want to maximize, my time with her. And this is kind of fun. We recently just got into doing something, which I think is pretty cool. So we've been going to these concerts, and I know everyone goes to concerts, but we're kind of putting a twist on it. So what we do is we don't buy tickets, right? We don't buy tickets in advance. So we'll wait, and after work, we'll zip downtown. So we live in Denver proper, not downtown, but it's only a couple rail stops down. So we'll zip down after work and we'll go to Union Station. There's a fun bar there, the Terminal Bar. Not as cool as the Sky Bar, and cocktails are extremely expensive, but still fun. But we'll sit and we'll wait, right? And what we found is the magic hour is about 90 minutes before the show starts. And that's when you get your lowest price ticket, and we pull the trigger. And so we just saw the Rolling Stones like a month ago. Just a couple days ago, Billy Joel was in town at Coors Field. We saw him. So it's just really fun. I mean, and maybe that's a better hack. How to avoid paying really high concert ticket prices. Don't buy ahead. Just have some fun and go down and watch the ticket prices tumble. And then if it falls far enough down, go for it. But yeah, Jan makes my balance pretty easy.
I like it. That's a great answer. Well, we're going to link to everything we talked about today in the show notes. But my last question for you, Jim, is do you have any final thoughts you'd like to share or final asks of our listeners today?
Yeah. Well, first of all, Lauren, thank you. I mean, this was a lot of fun. I really appreciate being on this. I think this could be my very first podcast. So thank you for that. I really appreciate it. Appreciate your time and CUInsight for the opportunity. I would just say that, credit unions are amazing. I mean, this industry is amazing. The fact that credit unions share with one another, they're so open to offering up great ideas and strategies that have worked for them. And they genuinely want those same things to work for their colleagues and their peers. And you know what? That's not common. That doesn't happen, right? I mean, it really doesn't happen in other industries. So I personally feel super fortunate to have spent these past 15 years partnering with a great team here at Student Choice, but just interacting with terrific people within the credit union industry. So I would say anyone that's listening, I mean, obviously they're probably part of the industry. Just be thankful, because it's a terrific place to be. And for any of those that might have heard something, during this podcast that is like, gosh, that sounds pretty cool. Hey, pick up the phone, give me a jingle or email me or something. I would love to be able to chat, because at the end of the day, I think good things happen when you're willing to kind of explore and listen and talk with one another. So I'm happy to talk. And thanks again, Lauren. This was a lot of fun.
Thank you, Jim. That is a perfect way to wrap up this episode. Such a pleasure getting to talk to you and learn a lot more about Student Choice. I hope you stay well. And thank you to all of our listeners today for tuning into the CUInsight Network podcast. And we will be back again next time.